we are able to find some major trading levels and key resistance and key support on a blank chart. So we will trade from full blank chart, and we will have some, we will find some key spots on the chart as well. In this webinar, I will request another time for the last time to everybody mute mic. But if you have a question, then you can unmute your mic and you can ask your question whenever you like. So you can just interrupt me, or you can interrupt Dennis if he is speaking. It's no worries of that, but yeah, just ask your question so we can help you out and we can figure your question. So I will start recording right now. I don't know, Dennis. Yes?
I'm already recording. I just started. Cool.
Okay, good. So I don't have to record? And we're fine. Okay, so welcome all of you. Again, webinar on Monday evening because I've got some spare time again, so please welcome all. I will start screen share a blank chart on pounds. Yeah, because that's the currency which I trade the most. We have, like you can see here, I've just took a blank chart with no indicators all in, and yeah, just some candles which are going short and long all the time, and you see a big candle right here. So what we need to do to find is to identify some key levels on the chart without having any indicators. So in the first, yes,
for interrupting, but are you sure that you are recording? Because I used to see a red button somewhere that's showing it's recording. I'm not seeing it right now.
Oh, let me see.
I'm recording.
Oh, Dennis is recording the webinar.
Okay.
Have a good meal, Dennis. Well, in the first part, if you have a blank chart, you have to find some key levels areas. But before you can do that, you have to know what is actually going on with a particular currency you're trading. So in this case, I have no clue in it. I see it's going bearish a little bit, and we go a little bit back bullish, a little bit sideways, and then we have a big candle over here. So we need to know what happened over here, right? So as we all know, on cables, so the sterling pound, we have major support and resistance because of the Brexit. Because Brexit was very not. It was not forecasted in the beginning that Brexit should be the outcome. So a key level for Brexit is just like you can trade the NFP, so the non-farming payrolls. You take the high and you take the low, right? So that's exactly what we are going to do with the Brexit. So we take a 30 minutes chart, and you can do this as well on your phone, right? So you don't need any tools to do this, and you just go back till the day that Brexit was a fact. And I mean, we have to go a little bit back in the past. I think it was June exactly. Here we are. So that was the fat finger trade. The Brexit was. That's loading a little bit. There we go. There's Brexit, right?
It should be June the 24th.
Yeah, exactly. That's exactly over here.
Yeah.
So what we do on Brexit, we only search for Brexit was actually an outcome of votes the whole night long. So more voting bureaus came out with, yeah, it's a yes, we go for Brexit, we go for Brexit. Then there is the no camp, the yes camp, the no camp, and the yes camp won eventually. So the very important thing is to know what is the last pip on the high before Brexit became a fact. That's the 150.17. Not important yet because we know there is a lot of room above our chart and our actual price. But what I want to know is actually the bottom low of the Brexit, because this could be a major resistance or support, because yeah, this is the last pip which is sold. So from that point we found major support and the pound came all the way up to this level, right? Let me just to this level. So that's almost like 800 pips, right? So this level is not important yet, but we just marked the low of the Brexit because it's a major event in the past year for Brexit, and it's even way more interesting than all the NFPs together, because that's the trigger point of the cable which occurred the bearish sentiment on the pair. So what we are doing right now, we're going back to our chart, and we find that level, it finds a lot of times supports, right? We have some support over here, and then we have some support over here, and every time it fails, it shows over, it shoots down, but it stays around that major level because the price doesn't want to fail that level, and the bulls and the bears are defending and attacking that level again and over and over and over again. So if we go back all back to our chart at this moment, we see that this level is still in play in our live time being. So as we can see, that 130 32.27 level was a major resistance and support as well on those levels. I can mark them all. You see that? So right now we are in negotiation in Brussels. So what I knew from this level is it is still in play, even though we are 8 months further, or 6 months further. We still see here some major support. If we break, it goes down like crazy. If we go back up, it finds some resistance, and so on. Right here, you can see it very closely. If we will zoom in on the chart, you can see exactly what happens. It finds support, it finds resistance, it finds resistance, it finds resistance. If we shoot up, it finds support, and so on. And that's exactly what it did last Friday. And that's the reason why I called in the chat room of 240 Code that we have a perfect selling entry on the 132.25 level. Because I knew on a blank chart, just by knowing the key level of Brexit, I had a perfect entry on my short trade last Friday. That's all you have to know about finding some key levels in major news events. And that's exactly what we do with NFP levels, or FOMC levels, or Fed rate decision levels. That's exactly what we see here, right? So we take, this was the interest rate decision, right? And those are 2 candles of 50 minutes. It's the same as 1 candle of 30 minutes. So if we take the high and we take the low, you can see exactly what the price does, right? You see, it finds support exactly on the low, just over here. And those are key levels to find and to try to trade out. And that's exactly what it is on the consolidation, on the auction of the level. If you see this level here, the price rejected exactly on the auction. And that's exactly what it did over here and over here again. You see this, guys? And this is actually pretty simple to find on a blank chart. You don't need any indicators to find some great spots to trade. If you just mark yourself the key levels, or you just get them into your head and you have no time to get on the computer and you want to find some good levels to trade in, and you see, oh, wow, pound is at 132.27. You can easily put a short on here with a 10 pip stop loss and you had a great trade, isn't it? Will be the same here, or this one, or this one. You could find some support as well. So that's the key findings, to find some support and resistance as well. So if we see this level, this was the consolidation level of the interest rate high. Well, it finds some resistance over here, and we had some 2 shorts over here as well. So that's it. So right now we are consolidating on a new level, and that's all the inside lows of the gaps. And those inside lows are just exactly, I will draw them, you can see them very closely. So here is an inside low of the gap, there's an inside low of the gap. Here we got them as well, and we are trading exactly on it because it finds right now consolidation on this mid-level, and this is exactly the 50%. If I draw a Fibonacci, but you don't have the tools on your phone, right? But you can draw them right now, and you will see. Yeah, it's a 6180. Maybe, yeah, 61.8. There we are trading right now on. Just on this high, on this low, and that's the average. That's why traders find those levels all the time, again and again. And what's happening at the moment, if we see the chart at this moment, we can perfectly find that we are in ranging conditions, right? Because we go long, we go short, we go long. But the market is always consistently searching for key levels. So the market won't just go all the way up to here and then find this back way down here. No, it will find like, oh, there's the 132.27. Oh, good. Then we go down. Oh, there was the 131.11. Oh, then we go up again. So that's what the market always is. It searches key levels to trade on every single time again. Even if we are on ranging market, the bulls will find they want to get paid on this particular level, and the bears want to get paid on this particular levels. And why is that? Because at this moment, the market can't choose any direction because there's very uncertainty about the outcome of the Brexit negotiations in Brussels. So that's, as long they are doing that, that's a big picture. So if you're talking about the big picture, this is the big picture at the moment. We just go sideways until the negotiations in Brussels are finished. So as long as we go sideways, we will find key levels all time over again to find support and find resistance and so on and so on. Any questions regarding on this?
Can you show everyone the NFP levels on the pound then?
Yes, I can do that. Let me see. NFP levels, because we've got a blank chart, right? NFP was, I think, let me see, it was the 3rd on Friday, right? So that should be around, here we are. Let me get a new chart. NFP this was the high, and this was a low. Because the other 30 minutes candle on last NFP was an inside candle, so we didn't make a new high or a new low. So this was the high and this is the low. This is a 1 hour candle. If we take this back to a 30-minute candle, you will see that it is just exactly the same. So as you can see here, the price finds within the NFP levels no direction. Once we come up the NFP level here, it shoots up. If we come back here, it finds some resistance again on the NFP highs. It's exactly the same level. Exactly the same level as the consolidation level of the auction level of the interest rate decision. It's exactly the same level.
Can you leave that on there now and try to show the previous month's NFP levels?
Yes, I will do that. Then we have to go to October. The 6th of October. NFP should be right here.
Yeah. Can you mark it in a different color?
Oh, I can do that.
Yeah, make it red or something so that other people can see it. They understand how important it is.
So, that is the October NFP level. We'll find the big picture. Look at it. You see this, guys? The price is exactly finding support on October NFP low. Is exactly rejecting going long on NFP of October low. So the price is actually ranging between NFP high of last November and NFP low of last October. Because those are major levels.
Can, guys, I'll ask you a question so that you can use some thought about this. Why do you think that is? Why would the market respect those levels? Anyone got an idea on that? Just think about it. Think about if you were going to catch a train. The timetable is announced. You know what time the train is going to leave. Right? And so what happens is, all of those passengers show up at a certain day at a certain time. Well, they show up at a certain time and a certain date because you know when NFP will be, yeah? So they put the volume on there. They load the volume on. They buy the tickets. Big paper sellers, big buyers, right? And so those people who bought got it right or got it wrong. And those professional traders that got it wrong have got to protect their stops. So they're going to try to drag price down by selling more to get it to their level in a bull market. And the bulls will try to bring back and get back to NFP stops. That's how ridiculous fear and greed is. That's how crazy the market is. It's crazy. It's madness. Can you continue with that, Albert?
Yeah, I can, no problem. Well, if you see those levels at this moment, so we started from a blank chart and we just marked our key levels on NFP high and NFP low. What you can see is actually it will always, in the beginning, it finds some consolidation and it will find some resistance. But this time we didn't knew NFP of November, right? Why do you think that NFP high was exactly on this marker? Because not that NFP was the most important levels at this moment, but the auction level. So the auction level of the rate hike was more important than the NFP level. So in this time, this level is only confirmed by the NFP. So that's why it rejected just on the pip, exactly on the pip. It rejected all the way back down to October, to test October's low NFP level. Because in October, the interest rate decision, well, it was pretty big news because they thought it was really hawkish, and that has to do with the fact that they told us like, okay, we are going for let me make it another color, let me make it black, because they told us that we would have some major interest rate decisions and maybe it would be they would be doing more hikes in the near future, and that's why the price shot all the way up. So that's why I marked those levels, key levels for GU. If you go back to the trading zone, then you see that we have major support on this level because it shot all the way down, sell it very heavily, and it came back up all the way to exactly the high of the level from interest rate decision of last October. And that's exactly the thing what I'm saying. Those big news events, they trigger for a very big currency like cable, whatever you want to trade, a massively sell or buying consolidation, because sellers, they don't like it to go over here because this is the greedy zone. And as long as we are trading within this range, we get massive supports on the low side, and that's exactly what happens over here. You see it, right? This is the low of the interest rate decisions of October, and we have massive support over here. So once we broke that level, it was searching for a new level, and that was the high of NFP October. So that's why you always can can mark these levels, but have to know which level is more important. Is it the levels of the interest rate decision from the Bank of England, or is it NFP of October? Which one you think? Anybody? No? Well, in the beginning, the main currency in this is the pound, right? Because the pound reacts exactly on what news comes out from England. So yes, we follow the news from the United States as well. It's very important as well. But in this particular time, in uncertainty of Brexit, then we have a following rule. Brexit news is always number one at this moment. Number two is the news of the Bank of England, because they will decide whether the economy is going to grow or we get a dovish economy in the next couple of months. So that's very important to remember. They don't really care at this moment what's happening in America, but they use the levels as key supports and resistances still, because the traders know every single time the price comes down to that certain level, we find major support or major selling of major resistance. Because that price was all the time rejected, whether on the buy side or on the sell side. So that's why you always have to follow the importance of the news. So if you're trading another pair with a dollar as main currency, then you will find out that the NFP is way more important than the interest rate decision of a certain country. It's not always true, but mostly it is. So that's why those levels were more important than the NFP level of October. Once we have a clear breakout of this level, so here it shot down, but it shots immediately back up. Then we have a massive rejection, right? So here you see that's a clear breakout, and we find the NFP high of October. That was the first level. So we didn't knew. So the gray line, you can't see them because we didn't have any lines on the. So actually because we didn't knew the NFP levels of November, right? They weren't there yet. So we only knew the low of the interest rate decision of November, the high of October. I'm sorry, this was the low of October. There was the high of October, and this were the NFP levels of October. So after that, we had the next levels. That's the high of the interest rate decision of November. And here we have the low. But don't forget the consolidation of November, because there was a massive movement. And we can mark this level as well. But in the end, we see NFP again.
The red line is which month NFP?
I'm sorry?
The red lines are which month NFP?
October.
That's from October, yeah?
Yeah, and the black lines are the interest rate decision of October from the Bank of England. The black lines.
Yeah.
And like you can see, they are very important as well, because what happens with the price, it rejected exactly on the high of the Bank of England's interest rate decision.
Yeah.
You see that? And a lot of traders ask me, but Albert, that's not true. This is the high of the interest rate of decision of October. No, it's not, because the initial news came out on this moment. Not anymore 3-5 hours later. This was just the noise which was trading by all traders. This area, we just call it noise. Like, we're trading up, we're spiking a little bit, we're coming all the way back down, and we are back in the zone. Once we have a clear gap and fade move all the way up, and we get some market profiles to go to expand, then we have not noise trading, but then we have a very clear expansion trade area. But in this particular moment, we only see some noise in this triangle. Are there some questions about that?
Yeah, actually, that's one of the hello, yes.
Yeah,
I'm sorry?
Can you hear me? Can you hear me, Albert?
Yes, I can hear you.
Yeah. Actually, that's one of my questions. How do we identify or how do we determine also if it's just a noise or a valid breakout? I don't know. So I think,
Well,
I can do that, Albert, if you want.
I'm sorry?
I can do
Yeah,
that.
you can do it. Yeah.
Yeah. Can you turn it to? Can you mark that news, one of the news bars, Albert? With
Well,
a
let me give you the mouse, okay? One moment.
All right.
You got the mouse.
I got the mouse. Can you see the mouse going in circles?
No.
Okay.
No.
Then I don't know if I have the mouse.
Yeah. No. Yes. No. You have the mouse. It's okay.
Right, so, if this is a news bar, Albert, yeah?
Yeah. That's the high and the low of the Bank of England interest rate decision of October.
Okay. Yeah, okay. Albert, can you, where is it going to be now? Going to be this way, no?
Yeah.
I'm trying to drag it along. Is that it, Albert?
Yeah. That's it.
So that's one 15-minute candle plus another 15, yeah?
No, that's four 15-minute candles.
I can't see it, it's 4. Let me go bigger. Did you get the level on that? Am I in the wrong place? Oh yeah, it's 4. Okay. Let's try to come back down again. What I normally do, Christine, and I think Pierre will justify this as well, because Pierre's been with me for quite a while now as well. So, I found out a very long time ago, maybe 14, 15 years ago, that there was some sort of correlation between news and volume. So I needed to key down into that to make it tradable, because you need to be able to justify a trade on it, yeah? So the most basic way that I trade news is to get 2 15-minute bars or one 30-minute candle or 1 hour candle. The reason for that is because of the volatility. If the volatility is quick and it gains direction because you get a move up, you normally get a move up, move down. If it's quick volatility, I could take, say, 2 15-minute candles, right? But there was a move down, I think, on the announcement, because you see it spike down. So I could have closed that range here, really, or wherever Albert's closed it, because it will both work, because you don't have to get it to the tick. So to identify what will be tradable levels for the future is that you just need to maybe use 2 15-minute bars, high volatility, slightly lower volatility, maybe use an hour bar to get the high and the low of the hour trade. See, why does it work? I'll tell you why it works. Let's think about this, right? When these major news things are going to happen, they're announced in advance, which means all of the dogs show up with their wallets at the same time. And they get the news and they make a determination, I'm going long now or short now, or I'm going to wait and then go short later on, because I think I could let the price move up, take a short within that 15 minute to an hour. When you get beyond an hour, then it's already, they're late initiative kind of buyers and sellers. They're not the responsive ones. They're not the big money. The big money's on the responsive. They show up early. So once they've determined, okay, there's the news, I'm buying, it leaves a trail. And the trail is this. These are where those big long orders went in. These are where those big short orders went in from professional traders, right? And so the rest of the month, they're going to spend their time, if they're in loss, trying to sell back their stops. Alright? So that they don't lose money. And the ones who got paid, they're going to spend the rest of the month, or the next 3 months, or the rest of the cycle, the business cycle, trying to stop these bears from dragging it back down to their stop. So when you move forward, you'll see the market will just keep playing these levels. Bulls are trying to defend their orders, and the bears are trying to say, look, I'm losing money here. I need to get the market down to my stop. Now, we're talking about small guys like us, right? You know, I'm trading what? 15 lots maximum, all right? I never go beyond that, yeah? Most of the time I'm 2 lots or 5 lots, yeah? And a lot of the time I'm on a half lot. But let's get this straight, right? These guys, they're huge, all right? They're putting in 10,000 lots on this thing. Now, some of them put 10,000 lots short. Now, you can't take a stop on 10,000 lots short. It's a serious amount of money. So what they'll do is, they'll say, right, if I had another 10,000 lots short, I could buy my stops back and influence the market at times of low volatility. So whenever they say low volatility, like areas like this, you see the volatility is quite low. There's nothing really happening, right? And so these guys who are trapped short will say, right, I'm 5,000 lots trapped short down here. I'm losing my ass. Oh, there's low volatility here. Oh, there's low volatility in this area. Let's just keep selling down, but sell more. Oh, no, almost reached my stops. Sell more. Ah, failed. Sell, sell, sell. And they'll try to reach their stops. And as they reach their stops, what they do is, with their short sides, they keep hedging downwards. They drag their stops down and down and down. And that's all they do. So why does it work? Because it's human nature. Some people are trapped long, some people are trapped short. Those rich people who are really stinking rich, these big institutions, will try to defend their loss. And those that are winning will try to defend their winnings because they're greedy and they want more winnings. It's human nature. So once you understand this cycle between greed, and this is fear for others if they're short, once you understand that cycle, then you can see that fear steps in for the greed. Because they're thinking, oh look, I'm making good money here, I might lose some of my profit. And these guys who are losing money all the way going up because they're short on an important level, they're thinking, oh well look, there's another important level. Maybe we could get short here because this was interest rates. Let me try to get short on interest rates. That's why it works. That's why I trade NFP to NFP every month. I'm just trading the levels. And I've got another batch of students on a different thread. And we don't do anything. We don't do pivots. We don't do ADR. We don't do anything. This is a different set of students that we just trade news levels from month to month. So you might be quite surprised that we're trading Japanese yen at the moment on NFP levels that were like 5 months ago, 6 months ago. That's what we're playing today, 6-month-old NFP level. Okay guys, that's it. Any questions on that?
Yeah, okay. So in that case, during news events like NFP, is it possible to predict the number of pips movement that will happen?
Yeah, I do it every month. I haven't got it wrong for 8 years.
Okay. So what is the average number of pips or movement during NFP?
In the first 30 minutes, yeah? You mean?
Okay. Yes.
About 70 pips.
Oh, okay.
Yeah.
So that's...
It's not ADR. It's below ADR.
But it's set on UJ, right? Not on cable, right?
Not on cable. I don't know cable.
No, exactly. That was okay. So that's a big difference between cable and UJ. So Dennis is now talking about UJ, and we are here on the chart of cable, right? So
yeah, I hand it back to you, Albert.
Okay, thank you. I will take back my mouse. So as you can see, exactly what Dennis is saying. Like this was the interest rate decision high. This was the low. So yeah. Bulls take control on the NFP low here, and they will search for the new levels. And bears get really, really scared on the highest level of the interest rate decision. and that's the whole game, which is in play time over time again. Also, that's it about news events at the moment. Well, if you let me get a blank chart again. Love it to make some blank charts because
Albert,
yes.
can I ask a question before going to a next? Yeah, I just want to clarify. During a news event,
Yes.
we determine the range of the news event the first 30 or 1 hour.
Yeah, it depends on the volatility. Well, then it's just also said, like, no, I keep the basic rule of what I learned 6 years ago because I used this trading strategy for already more than 6 years. So you can imagine, but I use actually always 4 15-minute candles equal to a 1 hour candle. So you see, it's exactly the high and the low of a 1 hour candle. You can see that, guys. I will always use that because I know whenever the volatility is low or high, I always have it's not on the pip, right? In this particular case, we really nailed it on the pip because you can see the high is exactly on the pip. It's unbelievable. But normally, it can be like 10 or 20 pips from the marker, right? Like you see here, a really good buy exactly on the high of the interest rate decisions. But normally I just use a 1 hour candle, you can't be wrong. That's actually what I try to say. Okay,
So
any questions? Yeah, sorry.
So in drawing the key level for that particular news,
Yes.
we just get the value of the first 1 hour bar.
Yes, on the first 1 hour candle. So we don't look at this because those are late buyers. They get greedy, and
Yes.
those are all retails which we're thinking, okay, let's just buy all the way up, and we buy and we buy. And here the big boys are thinking like, okay, let's shred them at this moment, and we bring the whole price back down into the area. And all those buyers over there, they are trapped.
So,
Still-
so,
Sorry?
so after the first hour outburst, we
Yes.
don't play the market anymore.
I'm sorry, we don't.
After the first hour outburst, what's
Yeah.
the strategy of playing the market then?
Well, that's a good question. In fact, you can wait till it's back in the old pattern, right? Because as you can see here, we had a gap and fade pattern expansion, right? And
Okay.
as long the market doesn't come into the same pattern, so actually if I want to make sure that I was trading this level, I would like to see this pattern, right?
Okay.
That's a whole different pattern with which I can see right now. So what happened actually, the market just shoves up, made a double top, tried to find some, they tried to break the top again, but they rejected massively and they started to sell down, right? Why I didn't trade this one, because we are not into the market profile, and we didn't went to into the market profile because this is not the market profile. The market profile says me something else. It is just in gap and fade move all the way along, right? So this move for me was not initial. It was not the market profile which we had in the earlier phases. It doesn't mean that news changes the market profile, no, because the market profile it could change, really. If we went short over here, we had the same market profile, but we go the same way, we go up, we go down, right? So that's why we call this, a zone where we actually don't trade, because it's no man's land. It's no man's zone. It's just noise. Because you can't enter these markets over here because you don't know where the price. It easily can fall back into this range, right?
Albert,
Yeah, I'm sorry.
how many pips is it from that on the left? Come left a little bit. No, not the chart. Stay where you are. You see
Yeah.
the 2 green impulse bars on the left? Yeah. No. Go right again and stop on the 2 green bars that you hit. No, you're moving the chart.
Okay, you take the mouse. You have the mouse.
Yeah, I want to show people something here.
Well, yeah, you have the mouse. Yeah.
Alright. So, as you can see, this is an important level, right, guys? Traders were short in this market, right?
Okay.
The rest is noise, is exactly right. So if we measure from here, see how many pips that is. That's 287 pips, yeah?
Yes.
That's not noise actually. Albert, that's not noise because look at how many pips that is.
Well, it is noise because the pips are not confirmed into the market profile.
Then you're right, yeah. Okay, so this should be 30 pips if at a guess. Okay, I'm guessing now. This is 30 pips from here to here.
65.
Yeah, that's it then. So yeah, that's pretty much it. So if we look at, if we get rid of this now and we put another little arrow, which will be down here. I don't think that was an arrow. We might look like idiots. It's because it's a delay, yeah, on this thing. So if we look at about here, this is where they went short. You see the two green bars, yeah? They're trying to, they think it's a short market. They've hit the high of the news level. They've gone short, okay? They've rolled back their stop loss, which would be a hedge or a stop, depending on what type of trader they are. And the market said, we're not having any of that because these bulls that were responsive bulls down here became, it's alright, we might look like an idiot, but there's a delay. Okay.
No, it's not delayed. You're fine.
Yeah, it takes a bit of time because it's delayed when I pick it up. So these here are responsive bulls. Okay, and then when they saw a break of the high, they became initiative buyers. Okay, these responsive sellers got hammered because what happened, the bulls got really greedy, said, okay, look, we broke the high, we're going long. They waited for the gap up, the pullback, and they brought the pullback to the news level. Can you see the gap? I'll make it bigger, then you'll understand the gap and fade, what professionals use. Right, it's very subtle. I look for this all the time in charts. It's my favourite entry and it's part of my rule book. I publish my rule book, yeah? So anyway, right, so the responsive bulls went long. The responsive bears took a short here because they said, hang on a minute, bang, hit the level, I'm going short. It didn't, and it did start working out for them, right? But the initiative buyers came in, so they're responsive here, now they're initiative, and they keep buying, they get more greedy, they take the bear stops. The stops keep coming out of the market for the bears, and it takes all the stops, most of the stops, and it just can't go up anymore. There's no more stops left, right? And then that's how the market moves up and takes the stops. Does that make any sense to anyone?
Yes, yes.
The next point is, you want to know, how should I know whether I'm going to be long or short on the news, right? Without knowing the news. You could do that through market profiling. You might think to yourself, the NFP's coming, if it's a good number, I go long, if it's a bad number, I go short. But it don't work that way. Because if I look back on this chart and I think to myself, why is it long? Well, I'm guessing now because I don't trade GU, you know, I trade UJ, but I'm saying I'm going to find consolidation before this point here. And I go back and there's the sentiment right here. See the sentiment? This sentiment is saying whatever the news is, good or bad, it's long. Because they're discounting the good, they're discounting the news already on this line. See, they suppressed the market for days, yeah, They said, look, we can't keep going up because when the news comes up, we'll be so long, it's not going to work. We'll be overbought. So let's discount now so that we can drive the market up on news. So we could go to another news level. We're talking about sentiment here. I know it doesn't, some of this won't make any sense to you guys because it doesn't really, but it will do. It just takes a bit of time. Albert knows all this stuff already, but it took a long time for him to understand it, yeah? So, because it is very complicated, and I make it look easy, but it's actually complicated. Albert, where would be the next news level when it actually happened? Am I too far forward?
Yeah, you are. The next news level would be. I take over the mouse, Dennis.
All right.
The next news level will be NFP of November, right? No, that's not true. The interest rate decision of November. This would be the next news level. Let me draw it.
Yeah, can you draw it?
I will give it a little more. Let me. The white a little bit thicker, and we do. Oh, I'm sorry. Let me get another color. Let me make this one green. Is that okay?
Yeah.
And we do another one right over here. So there we go. Those are the levels of interest rate decision of November.
Yeah.
And then we still have the levels of interest rate decision of NFP levels of November. And let me make this one yellow. Is that okay?
Yeah.
Yeah.
So if you look at
So the low of the interest rate decision of November is exactly the same as the low of the NFP of November.
right, so if you were like a trader, which you are, right? So you're waiting for this interest rate news to come, yeah? So you're thinking to yourself, it's going to be a long event, right? Or is it going to be a short event? Yeah? So there are a lot of traders in the market that know actually what it's going to be. Yeah? And the market knows, not us, because we're not the market, we're liquidity providers. We just participate in the market because we're small, right? But the actual market, because remember we're only liquidity providers, they know more than what we know about what's going to happen, what the news will be. They're going to know, even if you watch Bloomberg, they still know it before Bloomberg knows it. Okay? And then like somebody might know Yellen at the Fed or somebody at the Bank of England. Somebody's gonna talk, you know, over dinner, over a champagne, whatever. So people talk. So the talk will be the talk, and all the talk happens before the news, and it happens a long way before the news. You know, one of these guys who is well informed, he's a responsive seller or a responsive buyer. He might have had dinner with one of the secretaries in the Bank of England, and they said, yeah, the interest rates, I don't think they're going to happen. I saw this memo, yeah. So what would happen is that if the market was so short before the announcement, when the announcement actually happens, the market would be too short to be comprehensible. It would be a disaster, right? So the Bank of England, and because they participate in the market, central banks participate by talk. They talk it up and they talk it down, the market, and sometimes they put actual liquidity into the market. And the big funds, as you can see here before the news, they talked the book up. They kept talking it up. Yeah, we're going to do this, guys. We're going to do some rates here. Everything's going to be beautiful. You know, everyone's going to be happy. We're all going to be in paradise, right? Well, no, actually, nothing was going to happen except the market was going to drop short, and they knew that, but they didn't want it. They didn't want it to drop so short that they wipe out their economy on one bad call, right? So they talked it up, they priced it in, they priced in the bad news, and then they could price it back to value. So I'm saying here, I don't know, I think on a guess that is the agreed value that is going to be the market pivotal point for the remainder of up until July next year. So let's take a look. That'll be the pivotal point. If we go below this, we're at economic disaster. If we stay above this, we're pretty much moving along nicely. Okay, so let's have a look as we move forward. Bit of guesswork. Yeah, we're just respecting it all the time. If we go below that, we're looking at economic disaster.
And that's exactly as well the NFP level of October.
Yeah, they protected it
Because
there
it's,
too.
it's
Yeah?
not only the NFP level of October, it's also the monthly pivot point of November. Support 1.
Yeah, so in summary, the interest rate levels impact an economy. Within an economy, there are lots of elements, lots of wheels and lots of clogs. The big clogs includes the government and the central bank of that country. They have to some degree, swim. Because if they don't swim, they drown. So they protect levels the same way as you do and I do. How do we make money? As a group here together, we need to make money, right? So what do? We just surf on their moves.
On the waves.
You know how they think. You know where they're buying. You know where they're selling. So all I'm doing is taking a free cab ride.
And go with the
Every single
flow.
day.
Okay, let me recap something. We do have a small quiz right now, so I would like to have everybody participated in this quiz. Except Dennis, exactly. That's what I wanted to say. So we have all those levels on this screen, and right now, like we came all the way up to the monthly pivot point support 1, but we can't see that because we have a blank chart. So it's the NFP low of October, right? What is the first level which traders want to reach? Anybody? So we are trading right now here. Where are the traders looking for?
Of course, the lowest level, the NFP low.
Now we just hit the NFP low. That was just over here. Let me make a mark. So we just bought on the NFP low of October, right? And we want to look for an TP. Which level we would TP?
TP.
Pierre, do you have any idea?
Sorry?
Pierre, do you have any idea?
Am I allowed to answer this?
Yeah, you are allowed to answer this.
Oh, well, I think it would be at first the NFP high, and the ultimate be
Which
monthly PP.
Well, the NFP high of October. Why this one? If we zoom
Where are we?
let me take a 30 minutes chart so we have a clear view. So like you can see, that's exactly what Dennis is wanting to say to us, right? We are trading the waves, right? From level to level, because there's the auction of of the big banks and the institutional sellers and buyers. So what Dennis is wanted to say, once we break the NFP high, there was no reason anymore because it was straightly broke. So we knew it was not going to break this level again. So we won't go up. So we couldn't buy over here. We waited
But
for
what?
I'm sorry?
Okay. I think I have something wrong on my chart. I didn't have the same October NFP at my screen here.
Oh, okay. Yeah, I understand, Peter.
Okay, I understand.
Yeah.
Well, once we came to the next major level, that was the interest rate low anti-NFP low of November. Then we see there was no rejection at all. It went straight through it, right? This morning.
Yeah.
So we knew the next level was the last level, and that's the monthly support one, but we can't see it on this chart, and it's the NFP low of October. So that's a major support level right over here, right? So once we knew this, it was rejected over here. You see the first candle rejected, so we can easily buy. So we do a buy exactly on this candle. We buy into the candle, and we are targeting a new level. Well, this one, if you go to a 50-minute chart, you will see that they found resistance on this level because it touched exactly the NFP low of November and the interest rate of November. Exactly the low, it came all the way down. That was the first wave, but it made as well a gap and a fade move. A very small one, but you can see it. I will make a polyline, I will show you. So this is the fade, and this is the gap. That's it. And then we fade back up, but we broke the major resistance. So the next level was NFP high of October, right? So as you can see, it went back down to the major level. It's just trading the waves, that's it. Scalp here, scalp there. You take a sell here. So you take a sell over here. You take profit on the big level. It is rejected. You go long again. This level was just rejected. It was not rejected because we shoot it all the way up. So the next level was NFP high of November. And there we go. We take we TP over here and we sell it all the way back down to this level. And over here we are just trading again. So right now we are consolidating because markets are quiet right now. We are overnight range. So right now we could easily trade. So right now we are trading the overnight range. So tomorrow we will have an auction price, and the auction is like, if I draw some lines, I take a new chart. Okay, let's go. So right now we have, let me take even smaller candles. It's going to range all the way like this, you know. And we can do tomorrow, we can do just a very easy way to determine where the market is going. We still know the NFP level high, that was exactly this level, it's still the same. And we know here the NFP low of October. If the market moves, let me just make this clear. If the market moves this night, or like this, you know, like this, and maybe this, you know, it's going like this, somewhere around this, you know?
Then it goes super long.
I'm sorry?
It'll go super long if it does that.
Yeah, okay. But you know what you know what I mean, that is. But initially it will go out of this area because we need to find a direction. And whatever the direction will be, if we break out to the above side, we will find again, we will try to attack this level again. If we break this level, right, then we go back to the next level. And the next level is interest rate decision low of October. And so we trade on and we trade on from level to level. And that's it, actually. We just trade the waves. But now the $1 million question. What do you guys think? If we broke this level, so prices at the moment we are trading, let me make it another color. We are trading on the yellow line, on the purple line, I'm sorry. We are trading on the purple line. We broke the level of interest rate decision of October. Which level we will trade? Anybody?
I think if you mean a target, that should
Yeah.
be
That's what he means, targets, yeah.
Exactly.
monthly
Which
pivot
tar-
point. Monthly pivot point as
We
first
don't-
target.
Yeah, we don't have any pivot points. We have naked charts, right?
Okay, huh?
Yeah, I think what I was trying to say is, we're not going to use pivot points to determine targets and entries. We're going to just use
No.
the news. Because the thing is, you need to learn how to trade the news, and then understand those levels, then look for confluence once you become
I
a
understand.
chartist with pivot points. Because pivot
So-
points will take a bit of time to learn, you know?
Okay,
That would
thank-
be. Actually, it was almost at the same level around the monthly pivot point where we had the rate hike candles that we should be targeting also.
So Pierre, which level do you think we will reach? If you don't have any pivot points, right? So we only see this chart, and we broke the interest rate decision low of October.
Yeah,
What level are we going to reach for next?
I think that's gonna be 132.70.
And that's this one, right? The interest
Yeah.
rate decision high.
Yeah, is it?
Well,
yeah.
you guys forgot something. Because in the whole of the beginning of this webinar, I have told you something about Brexit low, right?
Yeah, I heard you talking about that.
Well, the Brexit low is the most important level in this chart, but I deleted it. But it was a $1 million question, as I already said. So you didn't make $1 million. I'm sorry, Pierre.
Okay.
No, let
give
me.
him a donut instead.
Yeah, okay, it's good. But let me clarify something. Or let me make a bigger chart because this will take ages. I deleted the very important line, and I will just mark it again.
It is 132.24.
27.
Yeah.
Yeah, exactly. Let me make this one. I will make it very thick, and I will make it red. Because
No,
that is
not
the...
red. I don't like red. Joking. Sorry.
Okay. Why I'm saying this? Because in the beginning of this webinar, I told you about this level. And I was wondering if you did forget this. And why I'm saying this, look at this. This is Brexit low. Exactly as we have here Brexit low. You see this, guys? So once we broke this candle over here, and we are trading on the purple line, what we are looking for is Brexit low, 132.27. That's it. We want this level. Once we break Brexit low, then we are searching for October interest rate decision high. That's it. That's the waves going. That's how we trade.
Remember,
Level to
guys,
level.
that we discussed, when Brexit happened, it's just like any other level, but it's a very major level. It's really important. There are bulls trapped. 500,000 is nothing as a figure in dollars. We're talking about some guys are trapped there they're looking at a red book in their account, fund. They might have $750 billion in that, losing money. And they've been holding that loss ever since Brexit. And they're trying to get that loss into profit. And even at 1 pip profit, they can't close it. Because at 1 pip profit, their volume commission costs are going to be $500,000 in volume commission. They need to clear at least 200 pips to break even with these huge positions.
Yeah. So I was right anyway. We're just some pips below the monthly PP anyway.
There's a fly in my room. It's killing me.
So, guys, is this clear for you, all of you? Christine, you want to say something? You are unmuted.
Yes, it's very clear. Thank you for that explanation. However, I would like to know about the gap and fade. Can you show us more examples about that?
Yeah. So in gap and fade move, we will actually always see in in an expansion in a contraction market mostly. But you see them here on this chart as well, right? So let me find some.
Do you want me to do
Like-
gap and fade, Albert?
I'm sorry.
Do you want me to do the gap and fade? I think
No,
I-
maybe.
I think it would be better because I don't think you'll be able to do it as good as me at gap and fade.
Yeah. Okay.
Yeah. No, he won't
That's
be
fair
able
enough.
to. Okay.
I'm sorry.
I don't. No, he can do it, but it won't be the same. I think it'll be better. I think they get.
Yeah, it's better that Dennis will clarify the gap and fade in a while.
Yeah. All right. So,
So
should I do it on a small time scale? That was their question, right?
I'm sorry.
Their question was how to do gap and fade.
Yeah, that was the question.
All right. So can you give me the mouse in?
Yeah, you have the mouse.
Right. You can use any time frame, but for descriptive purposes, do it in 15 minutes because then you can see the fades quite clearly. So let's just identify a few. All right, so let's imagine for. Let's make it bigger if I can. That's too big. Okay. We'll just take a gap and fade. It's quite simple. You identify a level that you figure is in a ranging market, right? So to do that, we'll just take. I'll show you on a chart. Just one moment. Okay, there's a range. You see it? It's here. That's a terrible colour. Let me change the colour. I guess red will show up as well, yeah? Okay, I hit red. Right. In this box is a small range. When you see a range of any type, small or big, it basically means that professional traders are looking to take positions there, yeah? So when they take a position, these are big positions. They're not like us. When we take a position, we can get filled right away because we're only going to take, say, one lot, half a lot, one mini, whatever we're doing, right? But these professional traders here, they want to get on, say, 1,000 lots. So when they call the broker and they say, listen, I want to be short on the pound. I want 2,000 lots. And the broker will say, look, I can fill you 1,000 now, here, at this price. And at limit, I can come. At limit later on in the day, we can fill the balance right here. So what happens is, the professional traders get filled on half of their order. Yeah. The broker can't fill it all because there's not enough liquidity in the market. So he says, look, we'll create liquidity. Once we've got enough liquidity, we'll come back and fill the remainder of the position. So they get half of the position filled here. Find liquid. The market goes on price discovery mode, looking for punters, looking for late sellers, traps them. Now they've got liquidity in the market, pulls back, there's enough liquidity, they fill the remainder of the position short for this guy, for 1,000 lots filled here. The remainder of the position is filled here, right? And there's a couple of other punters saying, hey, look, I need to get filled too. Don't forget my 800 lot that you promised to fill me later on. So the market makes a quick move down, comes back, fills the remaining. All the institutional traders are now happy. They got the prices that they want, and now they can move the market down, and off they go. And then when the market gets exhausted, then they start looking the other way. So again, now we're going to do it when they go long. So right here, they say, right, I want to get filled long on the pound. I got 5,000 lots. And the broker says, I can't do 5,000 lots in one go. I'll break it down into two. Is that okay? And he says, yeah, take care if it's filled, right? So they fill the first 1,000 lots here. Look for liquidity. Late buyers, right? Pull the market back. The responsive buyers come in. They fill the remaining part of the position. So grab that, pull it down. On the fade, which is here. There it is. So what happens is the market does a move up, which we call a gap. There's the gap in between, right? That gap needs to get filled here in the middle. This is the gap. The white space here. The market gaps up to fill the gap back down so they can fill the remainder of their positions, and then off they go, right? So this happens everywhere, every day, all time frames, all of the time. It's just a gap of fade. Sometimes retail traders get all confused. They think, oh, you know, head and shoulders. No, it's not a head and shoulders, it's just a gap and fade, right? So you can see another one here, right? Institutional trader on the mouse says, I want 2,000 lots short. Broker says, I can't fill it all right now. I'll fill half of your position right now and the remainder at limit. So you get the fade back. Remainder filled at limit. Market carries down. So what we do, how do we, well, I know what Albert does because he learned it from me. So, so what do we do to get filled? All I do is, and what Albert does and all institutional traders do, is I see this is a fade area. I leave my limit order and I walk away. The market's down here. I say, hey, this is an imagine that you can't see this, right? You can see this only. So we say, hang on a minute, this is moving down. Okay, they're going to fill these positions later on here. So I'll leave a limit order. So I'll take my. Is this a live account, Albert? Or
yes, it's a live account.
Okay, what's the current price? I can't see the ticker. Is it way below?
Let me get.
Okay, I'm just going to do it. You haven't got big shit on there now, right? Okay, there's a sell limit.
No.
So I'm not going to do it, right? Sorry, I'm going to just blow Albert's account. So I'm going to leave a sell limit on this line. There's a sell limit there. And I'm going to walk away and wait for an act of God, and my order will be picked up. And then I'll get home, make some coffee and say, oh, I just made 200 bits. That's what Albert does every day. That's what I do every day. We just move to... My rule number one, be patient, enter on the gap and fade. That's it. Any questions? I'll show you another one. Albert, let me just buy 100 million lots.
No.
Albert, I cancelled it. Okay, now, just to do one more so you guys can see it. Let's go to comments.
What about million lots?
Only a million, Albert.
Then we have a fat finger trade long. That would be good for everybody in this room.
I think if we fat finger a couple of trades, you'll be quite happy.
Yeah, maybe.
Yeah.
I like the fat finger trade that happened
So
in
what?
June.
So look,
I think his broker gonna be the most happy here in the.
Yeah, that's for sure.
right. So imagine that this is my buy limit, yeah? This line coming down. Oh, it's so big. Albert always puts big lines, because when he used to be at school, he used to have a big crayon and a colouring book. Okay, so if we bring this down, I see a low here, right? So I would anticipate that there's a good... what time frame? Oh, it's a 15-minute. Oh, that's a good buy right here. I put a buy right here at limit. Yeah? Because I've got news levels here, and I got the stops here. So these geezers here, their stops are going to be around this area, no? They're going to say, right, I'm gonna go long, you know, I'm gonna make money, right? But they're going to put some type of stop or some type of hedge, right? And the market's going to want to take their stops. So I reckon that their stops will be around this area. And if I get filled on their stops, I'm instantly in profit. Make money right away. I don't have to sit looking at the trade. So
that's what I did this morning. Dennis,
I'm just about to finish.
Okay.
So the last gap and fade, I want to show you the short one, right on the chart. So, just quickly, so that you guys get it. Sorry, Albert, I don't mean to interrupt, but this is important for the guys. And I know what you're going to say is just as important, but not as important what I'm going to say. Right, so here the guys were, and some big fat cats said, Albert probably did this. This is what I typically do. Okay,
That's my order.
Yeah.
I just wanted to explain that order exactly.
Well, of course, we're traders, aren't we? We're gonna, you know.
I took that
we
cell
know,
this morning.
we know what a feeding frenzy is, right? So, okay, so people like myself and Albert would say, "Oh, look at that! There's a gap unfilled. It's developing. Look, market's moving down. We can't see this. That's not happened, but we can see this and we can see that, right?" So I'm going to say, "Oh, I want to fill this gap. There's the gap." Right, this is a gap now. This needs to be filled. So the market comes up, fills that gap, and that's Albert's entry today. Gap and fade.
That's not my first entry.
Yeah, I don't really care about your first entry because you're just showing
My
off
first
now.
entry was this gap. Look, there were some sellers exactly on this point.
Oh, you did that gap first.
Yeah, this was my sell this morning.
Nice one.
And I took my buy over here.
Yeah, for me, I wouldn't have taken that. I would have just said, right, there's the fade, I'll take that. But I wouldn't have taken this fade simply because I wouldn't have spotted. I wouldn't have spotted that, you know. But it's a good one. Nice one. But it's a fade, yeah, a nice one. Okay, Albert, back to you.
Yeah, well, I was actually finished with my webinar to spot major levels. But if you guys want to repeat something what we have done last time, feel free to ask something about it. Then we can cover it.
Yeah.
I have still 1 hour left. So if you guys feel like I'm good for 1 hour, or we say like it's good for now, then we just close the webinar. It's all up to you guys.
Yeah. One thing I want you guys to remember, sorry Albert, and Albert's points are fine, is this. Once upon a time, I was a trader too that didn't make any money. Just like other people are out there, going through the turmoil of trying to trade, right? The moment I became profitable was not the news levels, was not the pivots, it was the gap and fade. That's the most important technical trading lesson I can give anybody. And the second most important trading lesson I can give everybody is gap and fade. Without doubt.
I think many of the guys I see in the chat room are a little bit, when we talk about gap, they start looking for real gap where we don't have candles.
Okay. What gaps
Yeah.
are to professional? No, hang on. I'll explain it. Yeah. What gaps are to professional traders are not what gaps are to retail traders. What a retail trader would refer to as a gap is called an open block.
Yeah, this upside you have on
for
the chart.
professional traders. It's called an open block. What it means is it's an open block where there's no orders. It's a place where no orders were filled. It's an open block of orders, which we call iceberg, right? It's not a gap. This is a gap. The gap between this, what needs to be filled to this high. There's the high. There's the gap. It's a white space. It needs to be filled. This gap from here is on a longer term time frame. This gap here needs to be filled by this move going up. Then it's a filled gap. You could paint this black after this moves up. The gap here, what you would call a gap, can you see where the mouse is? That's not a gap. That's an open block. An open block means open unfilled orders. It means that none of the orders were filled here. It's an open block. Because there was no orders there. This is the
I used to call that as gap.
Yeah, I know. That's what I'm trying to teach you from retail to professional.
Yeah.
But Christine, there's a very good chance, and that's what you have to remind. Those orders, they tried to fill them all because the initial entry was long. In the opening of the market, but they couldn't fill it all because of lack of liquidity, right?
Yeah.
Okay.
So bulls are really trying to fill these orders. And why do they want to? Because they need refueling these orders. They need to get filled, no?
Yeah. They're sitting there, waiting there.
They're still in. They need to get into the market, those orders.
Yeah.
So there's so that's the reason, because there was not enough volume this morning or this afternoon to get to market in a total disaster, what Dennis was telling before. Because the bulls knew they are still waiting orders on us, and we need to get those filled.
How long does it take to fill that gap?
It can take
months?
it can take weeks, it can take days, but normally it will fill within a week. Normally, but that's you can't say anything on it. But they will fill it, definitely. They need to fill it.
Yeah. And what we call it on that open block, Christine, because open block of orders, right? It means it's open and not filled by orders. There are orders there. These orders, what they are is, because these aren't orders from like us small people like us, right? What these are is that these are what we call iceberg orders. It means they're hidden institutional orders that have been negotiated at a certain price, which we call a futures, okay? And these here is future negotiated orders that have not been released in the market yet from institutions. That's why we create a gap. Why are these orders that are not released in the market? They're called iceberg orders. Iceberg orders are a negotiated value between different hedge funds, where one will say, look, I have unreleased orders at 1557 I booked, right? I've got $550 million. I'm willing to give it to you at 2 cents on the dollar. Are you willing to take it? And they say, yeah, fill me here. And they swap that futures contract from one institution to another, and then the market, when it's ready to absorb those iceberg orders, will release those orders into the market at a time when they can make a profit from it. Right now, there's not enough short side handles to fulfill their take profit zone. When we take profit as small traders, we take it for granted. Oh, I've reached 90, I can make $90. When you're trading for an institution, the amount of slippage that you will get is unimaginable. You could get 200 pips slippage on entry. Imagine filling 10,000 lots immediately now. You will get 100 pip, 200 pip slippage. And that's acceptable to them. And when Anton Crail from Goldman Sachs talks about, yeah, we're always in loss for the first 3 months of the year. Well, that's because they're recovering their slippage. Because they're huge. All right, is that clear?
Race want to say something.
Yeah.
Race, go on. You have to unmute your mic. I can't hear you. Or you can chat. Do it in the chat room. Race.
Sounds like a flying saucer, doesn't it?
Okay, let me find the group chat so we can try to.
He's not raising his hand anymore. But,
yeah, I did it. Can I screen share?
Yeah.
Yes, you can do that. Why do you want to screen your share your screen? I'm sorry. Let me say. How do I do that?
What do you want to share?
Yeah, I'm just wondering if I can share it.
Can I screen share for the gap and
For the
fade?
gap and fade.
Okay. Maybe he wants to show an example or
Yes, he
a
can.
question. Yeah.
Yeah, you can do that.
Yep.
If he messes it up, we'll kill him.
Well, you can do that.
You need to request screen share from you first, Albert, and then you can accept, and he can screen share. But he needs to send a request first.
Please give me request. No, you have to request by yourself.
Try to stop sharing, Albert, and I think he can take over if you stop sharing.
I stop sharing right now.
Yeah.
Okay.
And Ray, if you try to screen share now, maybe it's gonna tell you that you send request. Yeah.
Yeah, raise. Yeah, there we go.
Oh yeah, let me have a look at that. Analyze it.
Gap and fade candidate.
No, it's a hole in it. It's not filled. It's got to go down to that low down here at the bottom. There's 2 opportunities to fill that gap. 3 actually. I don't.
Yeah.
It's not a filled gap. No.
I
So
think
Dennis, where would be the gap filled?
Have I got the mouse?
Oh yeah, but that's the high, right?
Yeah. No. Have I got the mouse?
No, you don't have the mouse anymore.
Is the mouse
Dennis,
in the corner on the
you
right?
can annotate.
Well, wait. Let me do it like this. Wait a moment, Dennis.
You could take a screen share.
Yeah, I do.
No.
Dennis, show. You have the mouse. You can show where the gap will finish.
Yeah.
You have the mouse, Dennis.
Well, the first thing is that I want to show, because it's equally as important. You've got to look at quality first, right? So we know that Albert picked quality, because the first thing is to look at the range, no?
Mm-hmm.
Yeah, and I don't know what's happening to this. It's not coming down. Give me a second, guys. Right. The first thing we got is a range, no? So we see that this gap here has been filled by this move up, right? But what about this gap down? Has it been filled? No, it's not, yeah? Now there was significant volume went on here because you saw this move up, yeah? So obviously there's institutional traders who want to get second half filled here. So we could easily fade back down to here to fill this gap here. Now there's weaker gaps for day traders at the banks who are scalpers like me, who are crazy. They might look at it this way. They might say, look, I can bleed this and then I can go home from work early. I can fill this smaller gap, which would be in this range. So they might want to fill this gap from here down to here and then make a move. Because the market, this is why day traders are so part of professional trading as well as the longer term investor, is because the position traders might give a call to the trading floor and say, listen, there's no liquidity in the market. We will not get filled the second half down here. It's not going to happen, guys. Day traders, do your work. Get us filled here. We want you to get the positions on. And so the day traders might go to work here and start buying. Because they might recognise there's not enough liquidity to fill the bank's position second half here. So the day traders will go, who's that? Is that Albert?
No, it's not me.
It's fucking terrible, isn't it, that? So, if you think about it, look, this, one thing that I like to tell everybody, that this is a professional business. The techniques that are used by professional traders have worked for a couple of 100 years, even longer, yeah? They go back longer than that. Nothing changed in the market. The only difference in the market now is we use computers to trade with. When before they used to use notes and they used to write things down on a papyrus, or they used to write things down on a piece of paper. But nothing's changed. We're using the same techniques. Okay? So you wake up, right? The position traders are long. You see there's certain, and they're long. Can you find out? I think that's Joseph, yeah? Can you,
One moment, Dennis.
can you turn his mic off?
Yeah, I will try to figure out who it is.
Sorry, I'll turn my mic off.
Yeah, we don't want to hear you in pain, man.
Okay, you can go on.
This is right. So this is a professional business, right? There's no ifs or buts in this business. There's nothing that's not already answered. There's no holy grail. Trading is trading, and that trading is called common sense. It's called non-common sense, and that's the relationship between fear and greed. So what the professional traders, whether they're professional retail traders or professional institutional traders, they recognize the relationship between fear and greed. So all they're looking at is liquidity. Where's the liquidity? Where's the money? Give me the money. So imagine that you're on the institutional side. And why is it relevant to us? Because we're small. We want to ride on their move. I want to get filled where they get filled, because it's always they want to get filled of value. Because money talks, right? If you go to a broker and say, I want 50 million filled, he's going to give you the best price in the market because he wants your business, no? And if he says, no, I can't do it, you're going to say, well, I'm not going to use this broker anymore. I'm going to take my business to Citibank, or I'm going to take my business to Merrill Lynch or some other company, RBS. And that big investor will walk away. They lose their biggest customer and they're pissed off. Now, so if the market's trading up here, and the big guy walks into the broker and says, give me 900 million on the pound down here, they will give it to him. And they say, no, we can't. He'll say, all right, I'm taking my business somewhere else. I'm not doing business with you anymore. It's that simple. It's a professional business. So, okay, they come in, they get filled here. But they can't fill it all because they're too big.
Dennis, you have to use your mouse because we can't see your mouse at the moment.
Oh, you can't? Oh, I'm sorry. I didn't realise. So, how do I get the mouse?
You have to click first in the screen and then you can use the mouse.
Is that the mouse? Is that my
Yeah,
mouse?
now it's the mouse working.
Oh, I'm
yes,
sorry,
exactly.
guys. I didn't know. All right, so let's take a look at this, yeah? So the market's sideways, yeah?
Yeah.
So the whole market is thinking, oh my God, we can't go anywhere because this big guy, this big, huge investor is telling half of the market, you feel me down here or I'm not going to do business with you anymore. I'm going to take my business to America. I'm going to look for a broker in the States. I've had enough of you lot. I want to get filled, right? So here, where Albert recognized the institutional traders are going to go short, the broker said to the institutional trader basically, okay, look, I'll fill you 10,000 lots now at market, and I'll fill you another 10,000 lots at limit later on. So he gets filled, market moves down, market moves up. He's filled on both sides. And on this side, another institutional trader, or even the same trader, said, yeah, I want to get long here, and I want to get, and he says, right, look, I'll fill you 100,000 lots at this price, but I can't fill the balance of 100,000 lots. But I can offer you at this price. And he says, okay, I'll give it to you. So the market moves up, he fills the balance, and we keep moving up. And then he says, what about my other 200,000 lots. He says, look, you have big positions. I'm not sure, but I'm going to try to offer you this. So the gap gets filled from here all the way down, right? And then meantime, this guy that got 500,000 lots short, he's waiting to get filled on this gap here to get his next 500,000 lots short later on. So he's happy for a little bit. He's rolled some off. He's hedged because he's a bear. His orientation is bearish, and he's waiting to get filled the next part of his position here. So the market just gaps and fades everywhere. If we roll along, there's the gap fade for this part of the move down here. There's the gap fade for this part of the move up here. Oh, sorry. It's just an endless game of gap and fade. And when I realised what was going on, fill me here, fill the balance here. Yeah? They can't fill it all. These guys get massive positions. They're not like us. We just buy and we got an order. They can't just buy. They've got to negotiate that buy. Because it's huge. They're huge. They move the market. If I put in 1,000 lots, it ain't going to do anything to the market. It don't care. It will fill it. But these guys are, you're talking about 15,000 lots. One eating. Right, 15,000 lots. On, right. Now that leaves me another 25,000 lots today to get filled. Yeah, that's one sitting. These guys are hungry, yeah, because they represent huge money. They're representing money that is trillions of dollars. They're not representing 200,000, 2 million, 3 million, 4 million dollars. They're representing guys on yachts that have liquidity of 2 trillion, 3 trillion, some 15 trillion, some 30 trillion. They're rich. And they get filled because they are the market. They're the elite. And so as retail traders or professional traders or professional institutional traders, all they're doing is either protecting their own money or protecting the money on behalf of their elite clients. So again, fade the move, fade the move. Field, field. Right? Gap and fade. Go back. Stop. Chart. Do what I say was I'll kill the chart. Moved up. Major level. Faded back. Major level. Gap up. Fade back. Fill me off. 25,000 lots. Okay, I'll fill you 25,000 lots. I can't do the other 25,000 lots now, but I'll give you the other 25,000 lots at limit in the market. Okay, deal. Just give me a call when you fill the other 25,000 at market. At limit order. At the same fucking price, remember? I don't want slippage, not on this one. You promised me you'll find liquidity. And so they say, no, don't worry, you're my best customer, I'll find the liquidity. They find the liquidity up here, right? And then they roll it back, they fill the fade, and off they go to the races again. And it's everywhere at important levels. Everywhere you'll find it. So here we probably have another fade down here. It's endless, fades are endless. This is how the market works. Because this is a common sense business, yeah? It's not a guesswork type of business. The only guessing element here is choosing which is the quality range that the institutional elite traders are looking at. Are they looking at low quality or high quality today? What range are they trading today? Here's another one, yeah? So he says, can you fill me here? And then it fades back. He fills the other half here. Fill me here, gap up, fade back. It's an endless game every day, everywhere in the market. So one of the strategies that Albert uses, yeah, he just says, okay, let's just fade the move. He'll wake up in the morning, have a look and say, oh, this hasn't been filled. Oh, I'll leave a market order here for a buy. And he walks away. Has a shower, comes back in the afternoon and says, oh, I got filled, brilliant. That's what he does. Albert plays the gap and fade every day. I play the gap and fade in a different way because I have different risk reward type of a deal, but I'm still essentially the same type of trader as Albert. It's just that I screwed things down to because I have massive volume that I trade sometimes, but not always.
Yeah, well,
Different rules.
that's for sure. And sometimes I won't get filled because the market is not did not complete the gap, right? I have a good example. If you go back to the daily chart,
Yeah.
it's a massive chart, right? Well, Brexit. So this is fat finger trades, right?
Oh, that was a fat finger, weren't it? That one.
That was the fat finger trade, right?
Yeah.
But this one was from let me get this a little bit easier to see. Let me make it just black, okay? I will show you guys something like in this huge. So the close of the candle and the low of the candle. That was actually the auction and the bidders of the initial move up. This candle and all those orders, they get filled. Once we got over this line,
Yeah.
there was a gap, and I knew this gap needed to be filled. So they faded all the way back down, and there they go.
Yeah.
There was an unfilled candle over here, but they fill it immediately back up down.
You know
So
something, that's why sometimes I run it forward, my stops, run them forward, just so that I don't miss the move, you know? Because sometimes they don't come in on a dime. It's a couple of ticks off, yeah?
and like here they needed to sell, right?
Yeah,
This is the top of box zone 1, which I did in my first TA, which I presented on FX Rebels and 240. This one, this gap filled. They went short. They needed to fill again, so they faded the market back. But there's a huge gap all the way up here. And look, there they went. There they come in again.
oh, they filled that gap right across. That means that they had so many positions to get into the market on their behalf of their customer. It took
So they use
hours to get it filled.
So they use the noise after the NFP after the interest rate decision of October. The initial sellers of June and August 2016, they use that news to get into the market again,
Yeah,
because here they got filled on their orders on this area. So this is a huge gap which needed to be filled. Can you see that, guys?
Yeah, it took them so long. How many months is it?
It can even take longer.
yeah. Because
This
it's just
is-
the
this
quality
is the
that
gap.
you want.
You see?
Wow.
And I can show you way more. So this gap, they still needed to fill this gap,
Yes. So
but they
that
probably never will get filled.
Okay.
0.5. Wow.
So it comes down to just waiting for it to reach that level.
Yeah,
And then they will try to sell it back. Yeah, because they got filled. But maybe they might not get filled, and they call their broker. They said, okay, well, there's Brexit coming on, so maybe I don't get filled. So let's take a FIP, right? So probably they will have the orders. The brokers, they're calling the clients and they're saying like, okay, I can't fill you on 150, right? So maybe I can fill you on the 50 level. I can fill you on the 131 in the near future.
and they did.
I think Ray has a question.
Yeah, of
The
course.
chat. The chat. He has
I'm
a
sorry.
chat. He has a question. On,
Oh, there's a question in chat. Let
Yep.
me see. Chat. How can we recognize unfilled gas? Is it safe for us to place limit stop orders in advance? Well, that's a very good question, Ray. It is actually unfilled gaps are pretty easy to see. Well, if there is a huge, massive overflow from a certain event, and those are the big levels, then we get a proper chart, right? Then, like you see here, a lot of people will think, oh wow, this gap, it got filled, but they broke through it, right? That's what retail traders think. But if you come down to a 5-minute chart, then you will see that the gap was filled. Like you see, there we go. It filled the gap exactly on this area. So the price moved up, and then they filled, yeah, this gap was already filled, so they didn't needed to fill it again. So they moved the price back down, and they could easily break it because there was no limit, there were no orders left. And this is exactly the high, so they filled the gap as well. And like this gap, there's a huge gap over here. You can see that, right? They fill it perfectly, and now they try to fill again this gap. Let me draw it. This gap needs to be filled, right? So this is an unfilled gap. You can see some more unfilled gap. This is an unfilled gap. Let me get a daily chart. Okay, I get a clean chart. It's better. So there was a move up, right? A lot of people it's not filled, so they wanted to get filled over here, but they didn't because the gap is not closed. So this is an unfilled gap.
And then on the left hand side is the larger range for the bigger gap, yeah? Guys, the gap is honestly, it's the moment when I became a trader. I realised how the professionals fade the move. When I learned how they faded the move, then that was it. I was in profit. That was the first time I started making a profit. Because it's so logical. It's just pure logic. You can't fill 10,000 lots in one sitting. You can't. I can't eat any more than that right now. It's that simple. There's big money in the market. They can't fill their positions immediately. The brokers don't have that sort of liquidity. So they will fulfill a part of that position, and then they'll say, I'll provide you the rest at offer or at limit. Do you agree? He says, all right, fill me 15,000 lots now. Fill the other 15,000 at the same price later on. And he says, yeah, okay, deal. And they walk away. It's just business. So, professional traders recognize the relationship between fear and greed. The fear side is the broker. He might lose a customer. The greed side is the customer. He wants to be filled at this price, all of his positions, later on. The relationship between fear and greed.
Yeah.
It's just a business like any other. You walk into your cold store, you say, I want 1,000 bottles of milk. And the guy goes, wow, 1,000 bottles of milk? Jeez, I can give you 200 now. No, I want 1,000 now. He goes, look, I'll give you 200 now, but later on at 4 o'clock, I'll fill you the other 800. How does that sound? Okay, deal.
Yeah.
And sometimes the milk supplier doesn't have any milk, and then the gap doesn't fill.
Yeah, he can't do it. It's just not the liquidity there. Because what happens is, behind the brokers are investors. So the broker will call the investor and say, listen, I've got a customer here, a trader. He's high net worth. He's one of the coolest cats in the market. He wants to fill $800 million right away. I can do. I've got 500,000 in the account. Where are we going to get the rest of the millions from? And he'll say, yeah, I'm interested in it. I'll invest. Okay, I'll support the position. And at other times he'll say, nah, I don't want to. I can't give you liquidity today. So the brokers will all be calling each other. Anyone wants to invest 400 million? We've got a big trader. He wants to put in 800 million off orders. And if they don't find the investors, to support that position, it won't get filled. If they find the investors to support that position, it will get filled. Again, that's why I'm always saying the same tune. Listen to the tune. I'll say it again. 1. This is a professional business, just like any other business. You have investors, you have buyers, you have sellers. Sometimes the investors say, nah, it's too much risk to support this guy because he had a problem before with Bank Paribas. He promised $800 million of short side on euro, and he only came up with 200 million in cash, and we already paid for those orders on his behalf in the market, and he couldn't support it. I'm not going to fill this, so it doesn't get filled, but the initiation of that fill is already evident in the charts. Or in another circumstance, they find the investors, and once they find the investors, then you get the full fade to fill the other half of the position. All we're doing as traders, you, me, all of us, Albert, we're just trading what they're doing. We're just saying, okay, I think a big fat rich guy who's got millions and trillions is going to fade in that area because that's value. I'm going to ride the move, I'm going to surf on that move. That's it, that's trading. So it's a so we go to the next part. It's a professional business just like any other. There's no mystique in trading. Trading is what trading is. It's been done for thousands of years. Okay, whether you're trading rice or cattle or olive oil. The Syrians used to trade olive oil all the way to Great Britain, and Great Britain used to give them back gem work, and then they would say, look, I've got gems, it's worth you coming over here, bring the olive oil, I'll give you 70 bags of gems. And then the guys in Syria say, look, I can only give you 2 ships worth of olive oil now, give me the bags of gems, and then I'll come back later on and I'll fill you with the other ships full of olive oil that will be here 2 years later. This is trading. That's why it's called trading.
Yeah.
And so what you see in the charts is human nature trading, saying, okay, I'll sell you euro at this, and another guy saying, okay, I'll buy it at this offer. And that's why you have the gap and fade, because the market can only absorb so many orders at one moment. It's not an open, it's not a waterfall. The market contracts because there's no liquidity in the market. It contracts so liquidity starts coming back.
Okay.
All right, that's it.
We will slowly finish the webinar as well.
Yeah.
Are there still any questions left for the last round?
I have no questions, sir.
Who is speaking?
Hello?
Hello?
Joseph.
Okay,
Hello.
hi Joseph. Hello.
Me? So, in order for me to fade the gap, I have to select first the range that I want to fade, correct?
Yeah. That's a good one. The range that you want to fade.
Okay.
And the ranges determine whether you're a day trader, a swing trader, or a position trader.
Yes.
You got it.
Okay, I get it.
Yeah.
Shit.
See,
Thank you.
See?
Yeah, thank you.
yeah,
you.
exactly. So if you're a position trader, you're going to trade the wide ranges, the big ones. If you're a swing trader like Albert, you're going to trade the medium weekly swing ranges. If you're a day trader like me, well, I'm mixed. I do a bit of everything, but I'm comfortable right now just doing day trading. I'm going to just trade the less quality ones because I have less quality targets. I only want to make 50, 60 pips. I'm fine with that. Albert wants to do 100 plus. I don't want 100 plus.
Okay.
That's the way it goes, guys. Okay, one last question.
Me, I have a question. I think this has been discussed at the beginning, but can we elaborate why certain players in the market respect certain levels?
Because that is the place
Yeah.
where they get fair and greed.
Yeah.
So
It's value.
yeah.
Yeah.
Professional traders recognize value. They don't look at price.
Mm-hmm.
They look at value. They recognize areas in the charts where value is. And when they look at value, how do they determine value? They determine value by saying, look, the last time Joe went short at 180, he made $1 million. So it must be value.
Okay. All right. Yes.
So when they gap and fade the move, let's say a scalper like me, day trader, said, I want to fade this stupid little move here, no? There's a gap, yeah? Okay, market touched up.
No,
Okay.
you need to click, Dennis. We can't
Oh.
see your mouse. First, you need to click in the screen, and then you have the mouse. Right now, you have the mouse.
Is that my mouse? Okay.
Yeah, that's your
so
mouse.
imagine that, like me, because I have a different risk-reward ratio than Albert and Ellen, because I've been trading a lot longer, so I can just go in the market, make money, and I'm done, you know? I don't need to work very hard to make money. Okay, so for me, I would look at as a day trade scalper, I'd look at this, that's not filled. And how do I recognize that this is an important level? Because it's over here.
Mm-hmm.
Yeah, it's there, right? Okay, and so I recognize that's an important level, right? For me, because I can make some pips off that. I know it's not a lot of pips, but it might be, that could be $800 for me, and that's good money in 5 or 10 minutes. All right, so I'm going to say this is important for me, okay? This is a bit of noise up here, because, yeah, there's a fade there. I know that some position traders have probably faded this, went up, moved down, went back. But now all I can see is this, right? I look at this and say, hang on a minute, these guys took some shorts down here, right? And I know that there are guys with longs here who want to get filled down here. And there are guys who took shorts here, want to get filled again over here. So I'll determine as a day trader, well, I don't really care who gets filled. Because all I want to do is make 40, 50 pips and I'm done. So I come in here, I see that, and so I leave I say, all right, I'm going to sell this. If we pull back to this level, I'll sell this, because I'm a day trader. So if I had that trade, I don't know how much it is, it's not going to be a lot. But for me, it's brilliant, because I'm happy. There you go, 200 pips.
Mm-hmm.
Just like that.
Okay.
Scalp. It's a one-day scalp. That's scalping, a day trade. I'm a day trader. Albert would look at more important levels, right? Albert's not like me, a total day trader. He's a swing trader more. I think you're a swing trader, really, Albert, yeah?
Yes, I'm a swing trader, but sometimes I take some intraday trades as well if you're trading major levels,
Yeah,
like
only
today
when
or
only
yesterday.
when you're
You know.
copying my signals. All right, just a joke.
I'm sorry.
Only when you're copying my UJ trade.
Oh no, I don't trade the UJ singles. Sometimes I do, but honestly, I don't have any time to
Well, you
plot
don't
them.
need to. Okay, look, let's get back to the point. You don't need to. So Albert generally looks for better quality, right, than me. I just want to make a bit of money and then, you know, just act like an idiot for the rest of the day. So Albert might look at these important fades. Albert might say, well, this is a good fade here, right? I'm going to fade this level so he comes back, and Albert would make on a sitting. That's not really a good fade, right? Because it's fucked. But Albert would look at a good sitting and maybe want to fill this part of the map, right? Which is 1,000 pips. That's what Ellen would do.
Well, that's a position trader.
Yeah.
That's a position trade.
Yeah, that's
But
hang on, I
let-
haven't
let-
finished. So a position trader would look at this part of the move, right? But somebody like Albert would look at a swing trade. Position traders go for the outer ranges. Let me get rid of this. Day traders look at the intraday ranges. All right, I'll take this low quality. See, even if I took that low quality, that's 100 pips there.
Well, let me give an example of a trade which I would take,
Yeah.
Dennis. Like we have a high here, the traders coming back down here, and we've almost filled the gap, right? If I draw a triangle,
Yeah.
you can see that we almost filled the gap. So I would come up to that we filled the gap, and then I would take my shot over here, and then I would have a nicely, let's say,
400 pips easily.
well, if I go from here to here, yeah, 360 pips. That's it.
I've been trading for 19 years, Albert. I think I can work out how many pips it is.
Yeah. And exactly what we do is up here, right? We go up, we go all the way back down here. We fill the gap, and I take that long 170 pips. Yeah, there we go again, 200 pips. That's my trading. Like, and sometimes I take some intra-week trades. It's not intraday, but like here, you see that we came all the way here. We have a not filled gap here. I waited till the gap got filled. I took my short, and I take like 230 pips. That's my trade. And then then I show sometimes my book in the chat room, and you see I make good money on it. That's it.
Wow.
That's it.
Now
Yep.
you've all got a little bit of art that you can all make money from tomorrow. You just need to get better at that part of it, right?
Yes,
So
yes.
what we're showing you now is what we basically call basic trading. I know it's advanced, and this is beyond any level of any trading school out there in the market. But the thing is, this is only our free content. There's other things that we can do that we will, that we will provide you with, all of you, Like, you can ask Pierre a question. You can say, does Dennis get the open-close price right every fucking day? Yeah. Because I play this little game with Pierre. Right, tomorrow's open will be this, tomorrow's close will be this. And how many pips am I normally wrong by, Pierre? I normally get it wrong by how many pips? The
4 or
close
5
price.
pips, maybe.
Yeah, sometimes I'm 4 or 5 pips wrong.
That's crazy. That's really crazy.
So the sort of knowledge that we have is brutal, really. I mean, I've had discussions with some of the best traders in the world, yeah, and they actually, I'm not kidding. They just say, Dennis, go away, please. It's beyond my comprehension what you're doing, because none of them do it. Even the best traders in the world are trading at huge stock positions. They can't do it the way that I do it. I've traded with 5 and 2 pip stops, remember?
Yeah, how do you do it?
Because I know where value is. I know what price value is being offered. So why would I need a bigger stop? I'm buying in at the tick. Albert gets the tick sometimes. Albert's getting closer to getting ticks. I get the ticks all the time.
Like, mostly I'm about 5 to 10 pips away. Like, when I was, when was it? Was it on Friday, right? I called in the chat room. Pierre took profit at 132, I think, 132 area. And I said to Pierre, no, we go to 132.25, right? I told you that, right, Pierre, in the chat room.
Yes. Yes.
So what I did, I took a short on 132.25, just around here, right? And I had no chart in my position, but I knew the big levels in my head, right? So I was like, okay, I do a 2 pip stop loss in it, and I just grabbed my stop loss by 2 pips, right? And why is this? Because the 132.25 was not the main level. 132.27 was the main level, and it was quite a bit stupid for me because if I had a proper chart in front of me, I would knew the level. In this particular case, I took my short on the gap up right here, right, and I could run the short as well. So I made still good money on the short, but I was a little bit late by entering. So it was this is annoying, right? Dennis would have nailed this trade definitely by 100% hit. I almost nailed it. Last thing, before we go into close the webinar, if you see right now the consolidation, right, it's exactly on this level, the yellow line. This is the price where we are trading right now, right? If you see this range, we are actually trading in NFP high level area. If you see this level, right, is what we call NFP high area of last November. So why does the price actually range in this area? Because those are the buyers and sellers fight over. So they can use the overnight low liquidity to get a breakout till the bull side or a breakout till the bear side. So this is definitely a very important level where we are trading on. So to tip off tomorrow, the breakout of tomorrow of this particular triangle will tell us a lot about the direction of tomorrow's trade. And that's been said for today.
Yeah, but can you go back the chart? Leave it there, Albert. I'll show them a trade right now. If you give me the mouse back, yeah.
Yeah, you have the mouse.
Right, guys. So, just what I do, just to say, okay, where do I want to buy and sell tomorrow? If I'm a position trade, if I'm looking at quality, I will put a buy here. Because I want to fill this gap. I know the stops are here. Or I can go for the quality here, it doesn't matter. And I'm going to put a sell this area if I can find it's filling a gap. It's not, so I know I need to be selling up probably this level. That's it, that'll do. So I have a limit to sell up there and I have a limit to buy down here. Probably to fill this gap. Or that's if I'm aggressive. If I want to be less aggressive, I can roll this back down a bit. Belongs that would be a buy stop, yeah? Belongs, there's a gap being filled. There's the gap being filled. There it is. To that level. That's it. So my trade plan on GU, buy here and sell. Here. That's it.
The stop on that buy would be where, sir?
I don't use stops. Well, I do hedging.
Okay.
I'm a hedger, so Albert's a hedger as well. I'm a hedger probably 90% of the time when it's not working in my favour. I hedge at 5 pips.
Yeah, I wouldn't do that as on this particular trade. What Dennis is telling is hedging on 5 pips is intraday trades. So if you do this trade, you can't hedge at 5 pips because they will definitely grab it. Because there's a lot of noise and markets are fighting. And what we said earlier in this webinar is once we have broken the NFP low of October, which is this level, then we have total disaster in market, right? Yes. So bulls will always try to defend these levels. But what you don't need to forget is if you want to look for an intraday trade tomorrow, you can easily, there's still one intraday gap to fill, right? Let me take a 50 minutes chart. This one is the fill of this one, right? Because this one got filled, right? So we are clear on this one. So, but this gap, let me triangle it. This gap is not filled, right?
Yes.
Stop, Albert, stop.
I'm sorry?
I'll take the mouse because I've got something here. You see that's my order, no?
Yeah.
No, this was your order, yeah.
Yeah, that's the stops. I buy the stops, remember?
Yeah. No, this was your order. This was your order. Let me see.
The sell one or the short you're looking at?
Yeah, this is NFP low. This is your order. This one.
I said, where's my order?
The there.
Okay, let me have a quick look at that. Yeah, okay, it's cool. There's stops there, but it would be lower actually. If I was targeting the stops, I'd be targeting the stops about 30 pips from there. But only if that's S1. What is that anyway?
This is S1.
MS1?
Monthly. Monthly.
Oh yeah, then I'd be 30 pips behind. I'd be on the stops of 30 pips behind MSR1.
Okay.
Yeah,
Well,
I always am, and I 30 pips behind.
If I would take a short, I would be targeting this gap.
What's that? Is that R1?
No, that's Brexit low.
Okay.
This one is Brexit low. Very major level. So, but this gap is still not filled, right? This major gap.
Yeah, but that's the yellow line I put already, no?
No, this is Brexit line. The yellow line which you put was over here.
Yeah.
This was
That's R1,
This
isn't
is-
it?
no, it's not R1.
Can you put the monthly pivot on there?
I will do.
Only the monthly.
Well, guys, I gotta go. Thanks a lot, Albert. Thank you, Dennis. Thanks for the rest of you guys. See
Yeah,
you.
okay.
Bye,
Yeah, see
Pierre.
you.
Bye.
Bye, Pierre.
See you later, Pierre.
The monthly pivot points, just above here.
Yeah. There you go, look. That's R1, I told you. No, that's pivot R1, no? Let's just get this into an hour. Just give me a second. We'll wrap this up, guys. We just want to check something. I'll put it so it's tradable for me. Yeah, definitely. For me, I wouldn't be interested in any level apart from that on a longer term trade. The lower levels. And we're actually fading down to that. Position traders are in control up here, by the way. While we're moving down. Alright guys, that's it really. I think Albert's done, I'm done.
Okay. Hedging would be discussed in another webinar.
Welcome.
Yeah, but it's so complicated. I don't
Yeah,
think
yeah.
you even want to get there yet. I mean, we're still doing basics, and it's a bit confusing.
Okay.
Right?
So
Okay.
what I tried to learn you guys today was I'm in the group chat for like plenty of time, not as much as Dennis, but I read all the messages. I will always read everything because I need to know what you guys are struggling with, and I need to know what you guys feel and what you are looking for, right?
Yeah.
And I saw a lot of traders trading on phone because of better internet connections and all that kind of stuff, right? So I thought it is very important to find key levels in trading with naked blank charts. And that's exactly what you can do in your phone wherever you are, and you can do perfectly trading. So that's why this lesson was very important for you guys. So wherever you are, you can always find support in your heads and in your minds and on your phone with major key levels on news levels, etc. Because now you guys can easily trade. Oh no, we're going up, we're going long, but where's my take profit? Oh well, it's the next level that's just backs it low, you know, the 132.25.
Albert's
That's
exactly right, you know. Look guys, look, if you're trading off your phones and stuff, you can easily go to an internet cafe with a notepad and a piece of paper, write down the key levels that you're looking for, and then trade those levels off your phone whenever those levels are hit. Just do your research first, and then you'll come in profitable that way. Yeah.
Okay, good. I will close the webinar now. We are 9:30 here in Europe, so I will have some spare time for myself as well.
Yeah, I know
And I
you
wish-
have to go to bed early, don't you?
No. No. Well, I wish you all the best. I hope this webinar was very helpful for you guys. And I really hope that you will attend the next webinar as well, where we discuss any subject which comes up in the chat room. So if I see some subjects coming up which are very important at that moment, then I will cover it in the next webinar. But this is all basic trading stuff. This is not, it is very complicated to master, but still we are still in the very basic trading areas. If you want to master some advanced stuff, then Dennis will will go with you. I see we have some questions in the chat room as well, I think. Oh, thanks. Okay, thank you so much. Yeah, you're welcome. Thank you, all of you. No worries.
Thank you very much.
Thank you,
Dennis.
Thank you.
Albert.
Thank you once again.
Pleasure.
Yeah.
Thank you so
Look,
much.
remember I did that video, 5-minute video just now. Remember a bit earlier? You will see the
Yes.
buys for the responsive buyers, initiative sellers. That was a gap and fade there on the responsive
Yeah.
buys. All we did was fade the move.
Yeah.
And we did it live together today in the chat room, right? So that's how you make money. Like, you know, I've been pissing around the whole day. You know, I've not been looking at charts. I came home, yeah. I've been at coffee shops all day, and I thought, hang on a minute, there's a fade. Okay, bang, and then I bought the second one. Remember, I bought it twice. I bought the 45 for the scalp up, yeah.
Mm-hmm.
And that's it. I'm filled for the day. I traded for 30 minutes today. That was my job over with. So the significant thing for Albert that he showed you is significant levels, right, on news. And the last thing is, we went into gap and fade. Even when you find a significant level, you fade the move on that significant level. Be patient. Wait for the fade back. First you get the bounce. You can do it that way. Or, I prefer fading the move because then I get the confirmation of the move. Whenever I see price coming down to the area that I like, after a gap up, I'm sure that I can be a buyer now. To move gaps up, fades back, buy. It confirms the gap.
Okay.
Okay, finish now, Dennis.
Right.
Yeah, done, mate.
Has to go.
Yeah, stop whining, you little boy.
Okay, wish you all the best, guys. And
Thank you,
until
Albert.
next time.
Thank you, Dennis.
Thank you very much for that, indeed. Bye.
Albert.
Bye.
Bye.
Good
Bye.
night. Bye.
End. Recording Albert webinar. This is the end. Thank you very much, everybody, for attending.